gain momentum, gain momentum, chronic situation, erode trust, dilute value, stronger legal grounds.
Sometimes you see a market react really dramatically to a piece of news. Makes you step back. And that's kind of what's happening in South Korea right now. We're seeing this wave of optimism, especially with holding company shares.
Yeah, it's quite striking. And it seems to be pointing towards something specific, doesn't it?
Exactly. It looks like it's tied to a potential legal breakthrough, an amendment to Korea's Commercial Act that might actually be gaining some real momentum this time.
Right. And we should probably mention this isn't just random market noise. It's directly linked to that persistent issue known as the Korea discount.
Absolutely. So for this deep dive, our goal is really to unpack what this reform is, how it could maybe finally start to shift those corporate power dynamics, and address that discount for investors like you.
Let's do it. Because that Korea discount, it's been a long-standing puzzle.
It really has. For anyone listening who isn't maybe tracking the Korean market day to day, what exactly is the Korea discount? Why has it been such a problem?
Okay, so basically it's this chronic situation where Korean stocks trade at lower valuations compared to similar companies globally, even major innovative firms.
So they're just cheaper than they seemingly should be.
Pretty much. And it's not just a perception thing. The root causes usually point back to weak shareholder protections and, frankly, some pretty opaque corporate governance practices.
Which erodes trust, I imagine.
Exactly. Investor trust takes a hit. And specifically, you see holding companies getting criticized for actions that seem to benefit the controlling families, the insiders.
Right, like those self-serving mergers or spin-offs you hear about?
Precisely. Actions that might look okay on paper for a company, but end up hurting the ordinary shareholders, the minority investors, diluting their value.
Okay, so that's the landscape, the problem. How does this proposed legal change, this amendment, actually try to fix that? What's the core mechanism?
Well, the current law is a bit ambiguous. It says directors have a duty to act in the company's best interest.
Which sounds reasonable enough.
It sounds okay, but company's interest can be interpreted in ways that, well, let's just say, don't always align with shareholder interests, especially minority shareholders.
Ah, I see.
The proposed change adds a crucial layer. It expands that fiduciary duty. Directors would now be required to act in the interest of shareholders as well.
So not just the company as an entity, but the actual owners, too.
Yes. It explicitly includes shareholders.
That feels like more than just semantics. What does that mean, practically speaking?
Oh, it's a big practical difference. It means those controversial decisions, like, say, merging a really valuable subsidiary into the parent company at a suspiciously low price, those can now be legally challenged by shareholders much more effectively. It gives them stronger legal grounds, more confidence, potentially.
Right. Stronger footing. And the market certainly seemed to read it that way. That reaction on July 1st was pretty explosive, wasn't it?
It really was. HS Holdings hitting its daily limit up nearly 30%. And it wasn't alone. Crown Haidai Holdings, Hanwha, SK, LG, big names seeing double-digit jumps. That wasn't coincidence.
So what triggered that specific surge? Just the news about the amendment?
It was news suggesting that the ruling and opposition parties might actually agree on this. Suddenly, it looked much more likely to pass.
The political stars aligning, perhaps.
Kind of. And investors reacted immediately, betting that this could genuinely shift power away from those controlling families, put more scrutiny on directors.
And maybe make Korean companies more attractive globally, ESG and all that.
Definitely. Better governance scores, attracting global institutional money, maybe making it easier to raise capital. It lines up with those trends.
Okay, so there's a lot of optimism baked in now, but these things are never simple. What are the hurdles? What challenges lie ahead in actually making this happen?
Well, you're right. It's not instant. Legal restructuring takes time. Companies will need to adapt. There are concerns about, compliance costs, complexity, the usual implementation challenges.
Sure, the practicalities.
But despite that, the momentum does seem different this time. There appears to be real political will building behind it.
Which leads to the big question, really. If this does pass, can it actually be the key? Can it unlock that value in the Korean economy and give shareholders that voice they've arguably lacked?
That's the billion-dollar or maybe trillion-won question, isn't it? It certainly feels like a potential turning point for trust in the market there.
It really does, and maybe something for you, the listener, to think about. What would it actually look like if a major economy like South Korea genuinely empowers its individual shareholders in this way? What kind of ripple effects could that create, even globally? Something to mull over.